Alright folks, good afternoon. Wow, I'm like 15 seconds early. I don't know if that's ever happened before. Oh boy. Good afternoon. Hope everyone had a good day today. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure there is roughly the same. I'm no longer a NVIDIA short, and I'm back in this TSE long. Got out of that TSE a couple days ago at 7 after a monster move. Bought back into this ADMA on the daily chart today. So yeah, we'll see what that thing can do. It could definitely pull back more, but sticking with the trade, sticking with the game plan. It's been a real winner. All right, so let's take a look at what happened today. SPYs are up 0.9%. It felt like way more than that. Q's up 1.5% just about, and the IWM had no participation at all. Russell's flat. Equal weighted S&P's up 0.25%. So today was not a participation day. Today was a Mag 7 day. Today was a semiconductor day in particular. NVIDIA, phenomenal follow through to the upside on the break of that 130 today. But starting with the chart of the SPYs, we had an early gap up, quick pullback, but mainly a time correction. This is textbook actual gap trading here for like a gap and go situation. You get the little pullback for 5 minutes, time correction for another 15-20 minutes, ADMA basically catches up to the base, and bam, you're no longer extending that 5-minute chart. You're off to the races. And we got above yesterday's high, which we said in the morning meeting was an important spot for the market to get above and hold above. When it first happened, there was some extension there, so couldn't really push further right away. Midday price action, little pullback, but that set up more like a 15-minute chart, higher low in here to then give the continuation into the close. So the daily chart's looking good. Right after yesterday, when the daily chart had this market back in an area where you needed to be a little bit worried again if you were a bull, the daily chart immediately is looking good again. Yesterday, with the close below 570, week close, it looked like we could potentially give some further pressure today onto this 21 EMA and onto this recent support. We didn't. We gapped up. We got back above 570, which is a key spot number 1. We got above yesterday's high, which is key spot number 2. And we closed in front of, but did not get above, the most important resistance level we have out there right now, which is 574.50. So just like that, the SPY consolidation here is starting to look a little bit more bullish again, and is potentially setting up for a breakout for continuation. So we will obviously continue to monitor that. There's a good chance that Thursday's CPI, tomorrow's Wednesday already, Thursday's CPI is what really finally confirms the breakout above 574.50, or potentially still the breakdown below our more recent support. So SPYs did what they needed to do. The bulls did what they did to do. I can't speak. Did what they needed to do, and the Qs led the way. It was really the market cap weighting, right? The Qs led the way. Really strong day for the Qs. Exact same picture here with the Qs as with the SPYs. Was looking a little more precarious yesterday, but still above support, still above the 21 EMA. Today they were able to get above yesterday's high to negate any weakness, and kind of got above this next like 488 level as well. Then 490 and like 494 are still important levels on the upside. But SPYs and Qs are looking pretty good. And the IWM, no participation. It's a tight inside day for the Russell. Very boring, still below 218. So the Russell's still not confirming the bull move for the rest of the market. Tate let me know that the Russell futures, the RTY, has 2 inside days in a row. So yeah, so weakness in the IWM that we'll continue to keep an eye on. So we certainly do not have full continuity amongst our indexes of the bull move here, but SPYs and Qs are certainly looking better after today. As far as trading goes today, again, got to bring up the Chinese names just because, wow, what a gap this morning. Anybody that was still short from yesterday, once again, congratulations. I think you got more than you ever could have expected on that gap down. I got more than I could have expected on that gap down. I didn't have a massive amount of size, and it didn't matter. It was, yin gapped 30% or whatever the heck it was in my favor. 30 more than that, 32% or something like that in my favor, 33% in my favor. Look, I just want to emphasize this. It could have gapped 10% the other way. Could have gapped more than 10% the other way. Very, very speculative trade to keep that overnight when it closed on highs. Very difficult. So, for myself, I took off a lot of China short exposure into the close yesterday. I got out of BABA entirely. I got out of JD entirely. Yin actually gave a little bit of a pullback immediately after the market closed, and I used that as an opportunity to take off an extra 500 shares or something like that in Yin in the little pullback that we had, like when we were doing the afternoon meeting yesterday. And I can't be upset at all that I didn't have that stock, because having all that extra stock would have been irresponsible. So, had an appropriate position, got the big gap down. I would say, I wouldn't attribute all of that to luck. I think there was a really good thought process behind it, but the degree of the gap definitely a little lucky. I don't mind attributing my profits occasionally to luck. I never want to contribute any trading losses I ever have to luck. That's just kind of the way my thought process works. So yeah, that was great. But then the real question was, is this the dip to buy? Right? We've been saying every single day, or at least I have been, I'm a China bull, but I'm not, buying this upside extension. This is ridiculous. I would actually rather be short this upside extension than be long it and chase this price. Well, guess what? We had a big pullback into this equilibrium zone for the market. We're not really extended anymore. Granted, the move was so big and so fast that there is a lot of space between this 8 and 21 EMA, so you got to keep that in mind. There's a lot of extension down to the 21, but overall, we gapped down into the equilibrium area. So I actually did a little bit of buying, though I ended up not keeping any of it because I was able to make some money intraday. And again, there is still a lot of extension down to the 21, so I'm being pretty conservative at this point. But I bought a little bit of BABA at 108 pre-market, made some money in it. I bought it at 109 a couple times during the day, made a few bucks in it. I bought JD at 42 pre-market, was able to make a couple dollars in it. But I'm still not being like, super aggressive on this dip yet, because it's just one down day when there's a lot of space down to the 21 EMA. So we'll see when and if these things settle out. They can be really tricky to trade because they gap so big. A lot of the times these names have been terrible day trading vehicles, and just, it's been all about how they gap based on how they trade overnight overseas. Now it's been both. They've been decent day trading vehicles because the movements have been so big and there's so much hype around them. But you got to be careful with the swings because they can be super, super gappy based on how they're trading overseas and any stimulus news or lack thereof that comes out of the Chinese government. So that was the China trade. As far as individual trades go today, Affirm was my kind of favorite idea of the ideas I presented this morning, on the inside and up for kind of continuation above this 40 on the gap fill. I've noticed, and this is just one of the things in which way that the market has changed over the years. Back a long time ago, when you would want to buy like a breakout of a level or a breakaway gap versus a level, which is really more of what this Affirm was, if it was a really good trade, you could buy it the second the market opened, and then the thing would just rip in your favor and you would make money. I find that a lot of times now when I'm trading these news gap ups that could be breakaway gaps, that at the open they actually pull back off the open to a degree that would make you uncomfortable if you bought the opening price or if you bought a little bit before the market opened. And I've had that happen to me a lot, actually, with my ideas, where I'm starting to buy them a little bit pre-market. Sometimes they still just go and I make the money right away. Sometimes I buy them pre-market, and by the time the market opens, it's trading at a price where I wouldn't even be able to buy the stock at the actual opening price if I hadn't bought it pre-market. But there's a lot of other times, almost feels like the majority of the time, when I'm trying to buy that upgrade or I'm trying to buy that news name or whatever, and I nibble some pre-market or I nibble some at the open because I don't want to miss the momentum move, and they actually sell it down to a degree that makes me uncomfortable before the trade itself actually works. I've seen that happen a lot. So I've adjusted by trying to be more patient, where if I am taking that trade right at the open and there's a lot of extension there because of the news, I'm buying less, I'm buying it smaller, or same thing pre-market, and then I'm putting out like kind of bids lower in case they sell it down right at the open, which a lot of times they're doing, and that's why you could be uncomfortable if you buy the opening price or a little bit pre-market, and then have the so then I'm getting in a little bit better prices. That's kind of what I did with this Affirm today. When I did my research and I kind of published my watch list, I decided that this was actually my favorite one. I liked the daily chart. Trading well ever since that last earnings report. Overall holding in, just had a pretty big dip from 48 down to 38. Okay little pattern here, still holding some support. Created this pivot low below 38 that probably pushed some final people out. And then gapping up above that resistance that it kind of created of this potential bearish consolidation, and then potentially setting up to get above the high of October 1st, which would also be important. So I like the daily chart setup. Comes in with the upgrade as well. We know that this stock can move when there's news. But instead of, in this case, I didn't buy any at the open, I didn't buy any pre-market. I just kind of threw a bid out a bit in front of 40. Thinking like, all right, if they open this thing at, where they opened it, 40.70, 40.80, whatever, maybe it just runs and I miss it, that could happen. But the amount of times that I'm even just buying like a feeler, I buy, 500 shares or something like that at, 40, let's call it 40.75, the opening price. And then I'm having to manage my position and size up around that into a pullback. And that's even when the trade works. Let alone when the trade fails. And it's just like, it's just a lot more difficult. This time I decided, you know what, if it just runs without me, I'm fine with it, but I want better pricing. Like, I feel like yesterday's high area, which is an inside day, is kind of the zone to pay attention to as far as like where a stop loss should be. I always like to do that though in conjunction with, like, anyone who's been with me for long enough knows, I really, really don't like having stop losses above equilibrium on the time frame that I'm looking at. So I would want the 80 MA to catch up to yesterday's high before I really put a stop loss in there. And otherwise, I'll just kind of manage and watch the position until I get a pivot that I can trade versus or have a stop versus. So this time, instead of having that feeler at 40.70, I threw a bid at 40 or a little bit above 40. And I was like, maybe I'll get a quick flush at the open that'll fill me, and then the trade will work. That could happen, like almost like this tail to the upside, but in reverse. Or maybe it's a situation where normally I buy this, 40.75, even if it's just a 500 share feeler or whatever. If it just dropped by the time this low comes in, that's $1.50 against me. Be a little bit uncomfortable there. Being down, $750 or something like that, just off the feeler, let alone any ads I'm doing on the way down, before the trade then works. This time I was like, all right, I'll just put the bids out. So the bids got filled. First bid, and it was for then a little bit more than a feeler, a little bit more size. Got filled just a bit above this 40, and then actually this quick pop came in, I think, after I got filled. Confirm, yeah. Then this quick pop came in, so I was able to very quickly dump some stock. The stock trade's crazy. All the way up to 41.25 was my best fill. And then it came all the way back down and actually made a new low. But I was able to then manage the position really well because my pricing was better, and I had gotten a quick spike here to be able to cover, to sell some, to put some money in my pocket. So when this thing broke lows, I actually got distracted by something else and missed it when it broke lows. But when this thing broke yesterday's low and created this tail down here, I was just in a much more comfortable position to manage the trade properly add, then I got the pivot here, so this was going to become my stop loss, this pivot off the 80 MA, and then make better money when the trade itself actually worked. And then I didn't want this to be a swing, so I trailed it pretty tight, and unfortunately I got stopped out almost at the low of this pullback. I was trailing off of there was a 15-minute pivot right here at 74 cents that I was kind of trailing off of, so I got stopped out like 60 something cents with a little bit of slippage near this move, and then missed the rest of a little bit of P&L, but it's fine, it is what it is. But yeah, that worked out pretty well. I didn't really trade any of the other ideas that I had. Yeah, Qualcomm didn't really work, maybe a little bit off the open. What did Humana end up doing? Yeah, Humana was okay off the open if you took it. NVIDIA, I was still in my small swing short, but I called out in my list today, NVIDIA 130 long for continuation. Big daily resistance level here from August. So that trade was actually a great additional momentum trade to the long side. For anybody that caught it, ended up working out pretty well. There was a pretty relentless bid underneath it. But yeah, I mean, that pretty much covers my day. The biggest majority of my P&L just came from the China gap down this morning, and everything else was almost gravy compared to it. But Affirm was decent. I ended up trying to day trade NVIDIA to the short side on a few occasions today with mixed results. All is said and done, finished down a bit in it, but not bad at all considering what the move did. So yeah, that's all I got. Happy to answer any questions. Bill here, I think with more of a comment than a question. I'd like to close long option positions when I get a gap in my favor because the premium is sort of juiced from the volatility right there off the open when price can move either way. That's great information. I'll keep that in mind. I feel like sometimes the spreads at the open in some of those names can be really difficult to get fills, but I bet if you kind of cautiously offer out a little bit at a good price but into the spread and tell me if this is kind of what you do, then maybe you can get some fills there. Got it. From Tate, I've been trading earnings plays for over a year now. I've noticed that about 75% of the time there's a downtick off the open before a multi-day move. To manage that, I've been using the 2-minute ADMA with key pre-market levels to mitigate the issue. It's something that's become really clear over time trading them. Yeah, I get it. I'm not a big fan of 2 minutes, but I know exactly what you're talking about. It's especially true sometimes for a big news gap like an earnings play where you get the big gap, you get like a quickish downtick in the beginning of the day, but that quickish downtick a lot of times is just to like the 2 minute on the ADMA, and then you get momentum players that are coming in and buying off that spot, and then you can kind of get a run off that area. So not a big fan of 2 minutes, but I really don't hate it. Don't hate it at all with what you're talking about. From Tate also, these days all the names that go off the open at 9:30 either can't get filled or terrible spreads, like GNRC giving me a $6 spread off the bid. GNRC. Yeah, it's an expensive name. It's an expensive name and it's got low volume. What's it trade on? It trades on New York. So you got to remember sometimes when you're looking at the wide spreads on these names at 9:30 that New York Stock Exchange stocks, and this might blow somebody's mind, especially if they're newer here, New York Stock Exchange stocks don't actually open at 9:30. They open up whenever the market maker or specialist, whatever it's called, on the floor decides to open it. So they open up a little bit later, and you can tell because prints start going off on the New York Stock Exchange. Yeah, they're opened up manually. So sometimes if you're looking at a New York Stock Exchange name at 9:30 on the dot to try to trade it off an opening play, it's not actually open yet on New York, and the spread will be even particularly wide. And then once it opens on New York, it'll tighten a bit. So that's something to keep in mind. From John, is the red line on your chart the 21 EMA or SMA? EMA. I use an 8 and 21 EMA on pretty much every time frame chart that I look at to represent what I call technical equilibrium for that stock. In an upward moving stock like this GNRC daily chart that I have on right now, I would consider the 80 EMA to be the upper band of equilibrium and the 21 EMA to be the lower band of equilibrium, and the space between those moving averages to be the equilibrium zone. And when you have a stock trading above a rising 80 EMA, it is to some degree extended, but extension can have a lot of varying degrees to it, and that's one of the things that we really pay attention to when measuring extension and measuring how we want to trade, and understanding if this is too extended to buy or is so extremely extended that you want to go the other way, or not extended at all anymore, where you could be looking for like a pivot low to come in for trend continuation. It's a big part of my trading system. So yeah, John, if you're new to the team, I'm not sure if you are, but probably based on the question, you're newer to the team. So if you are, welcome. Over in the YouTube from Cyril, how do you estimate the potential for the CPI move? So we can get that the day before by seeing what the options are pricing in. You can, just look at the where the next day SPY options are trading, like the cost of them, of calls and puts, and add the number together, and then you come up with what the options market is pricing in for the move for the next day. So we can look at that tomorrow. Also Cyril on SMCI. The selling at the open was brutal. Yeah, some of the guys on the team had this on the radar today. I really did not. I felt, we looked at it at the morning meeting today, and I felt the gap up was too big to do anything with. And then they wrecked it, completely wrecked it off the open. I'm avoiding this stock a little bit. I do like it much better now that it's split. I think it's much more tradable since it's split. But this thing still really moves, even as a $50 stock. Can move very quick. So I'm glad that they split this thing, because it's making it tradable. When it was $500 or whatever, it was ridiculous trying to trade this thing. Buy 100 shares and be out of the money $1,000 blink an eye sometimes. Yeah, so that opening selling on that, if you were trying to buy it, was brutal. Did not hate the idea of trying to be long versus 48 off the gap up after a pullback, but this never gave you any signal to attempt to buy it, and initially pre-market at the open, in my opinion, it was too extended to try to buy. From Uvixi Bull in the YouTube, a bit of a weird question. When going bigger picture, do you ever think about lower time frame day candles price action, like right now in SPY, giving you info on how much the market cares about news? I'm not sure I understand the question. For example, we have election stuff over the next 2 months, but the market isn't starting to care at all. Yeah, it's weird that the market hasn't cared at all. Maybe it is. I wouldn't say that the market isn't caring at all. We definitely see some of the election risk in just the price that the VIX is trading at, but the SPYs haven't shown it at all. If you want to talk about the S&P specifically, I've said it a number of times in the past. The VIX should be trading at a much lower price for where the SPYs themselves actually are, but it's trading at a higher price because people have really hedged themselves out in front of this election, which the fact that we've been able to hold up so well with that happening kind of makes me think that we're not going to get an October pullback unless an event like a CPI actually causes it. We have to be able to go low enough to trigger the systematic selling levels to actually cause a real pullback on the market, and otherwise it might not happen. Harken back to I'm blanking on his name, the big China bull fund manager. He was on CNBC that we were all talking about. Yeah, David Tepper. I harken back to what he said when he was on CNBC that day about the S&P is basically pricing in a government that's not going to be able to get anything done, and the market likes that generally. So that is why maybe it's holding up better so far this election season, if you want to call it that, than any other election season that I've ever seen. I'm pretty sure that every other presidential election I've ever seen, I've talked about it on a number of afternoon meetings, they sell it down into the election and they buy it up after. I'm pretty sure that selling has already started by now in all those other times in my career. And yet this market is holding in like an absolute champion, even though the VIX is elevated, so people have those hedges on for sure. That's what the elevated VIX is telling us. People have their hedges. So usually what would make the market go down in front of the election is people reducing risk and hedging themselves in front of the election. So if the VIX is telling us that people have already hedged themselves out and the market hasn't broken down, does that mean that the market's not going to break down? Is kind of the way that I would think about it at this point. Again, unless an event like a CPI event hits that gets this SPX down to 5,600 and begins to trigger some of those bigger sell levels that we're looking at. So yeah, and then it actually almost maybe sets this market up to be able to break higher, because the flip side that we've also discussed is that if everyone, and including me, has been looking for a weaker October because that's what's supposed to happen, then maybe it doesn't. And the flip side is then if you break out, people who are under positioned, in some ways like me, in my long swings compared to where I usually am, at a certain point may need to chase price higher and can actually really facilitate a breakout even in front of the election, which would kind of be a wild concept. But we'll see. One step at a time here. I just would say just know your key market levels like we've been talking about. I don't think that directly answered your question, probably because I partially didn't understand it. If we make a new high and go through well in SPY, I can't justify caring about any potential dip from this election. From election is this thing. Yeah, so you're basically saying if we make new highs here and we go, I can't be worried about a election dip. And I think that your thought process there probably sums up the thought process of a lot of money managers right now who maybe actually will have to chase some degree of price if we get this S&P breakout above SPY 574.50 that we keep talking about. But one step at a time. So we'll see how that goes. Back over to the VTF. Cool, yeah, John, no problem. Any questions that you have as you're working with us, always feel free to ask them during the day and especially in our afternoon meeting. We do these afternoon meetings to help everyone learn and improve. From Rich, so if trading a thin New York Stock Exchange stock, then place an on open market or limit order. I've never done that. I've never used market on open orders, and I don't even know if they would trigger if you used a market on open order, because I've never used them. I don't know if it would trigger at 9:30 or if it would trigger because I don't know if Lightspeed or the order route is smart enough to know that the market opens at 9:30 versus the market opens up whenever the guy on the floor decides to open it. So I'm really not sure how a market on open order would work for New York Stock Exchange stocks. I've never done it. So what I do is I just watch the level 2. The order imbalance disappears, which I know not everyone has access to that information. But the second it actually opens for trading on the New York Stock Exchange, the order imbalance disappears and prints start going off on the New York Stock Exchange. Usually the tape speeds up a little bit also. So those are kind of the ways that you can tell that it opened. Yeah, the CTA information says that we're a seller in any tape right now, but the number is very small in a flat or up tape. It always has an impact. Every bit of selling has an impact, but it's a very, very small number. The number only matters, really, in my opinion, if you trigger the level to the downside. The market positioning risk is to the downside, but it's like I said in the beginning of October, and we used examples of the late February March period and the late June July first half of July period where we were certainly in a situation where the risk was to the downside from a positioning perspective. But, you know, in the case of this, like, February-March period, it took almost a full 2 months before you were able to sell off enough to trigger the selling to actually come in, and almost a full month in the June-July period. So here it's interesting to see if that doesn't happen, because once you get into November, then the bearish seasonality ends, and the corporate buybacks come back online and everything else. So potentially this market can become much more bullish in November again than it even has been. Anything else, ladies and gentlemen? All right, cool. We're gonna get Pat back tomorrow, which is wonderful. We love having Pat. Then I'm out Thursday and Friday in Las Vegas for the Traders for a Cause event. If anyone's going to be in Las Vegas, definitely let me know. And I guess that's it. So have a great night, everybody. I shall see you all tomorrow.